Order flow is great because it shows us where big players were active in the market. Those places are often very important and price likes to react to them later as support or resistance. So in this video, I'll show you a simple way to find those areas with order flow and how to trade pullbacks from them.
With this strategy, you want to set a time frame to a 5-minute to 60-minute time frame. What I prefer is 30-minute time frame. You can see that on the picture here. So this is a 30-minute time frame. And you look for a volume cluster within a trend. So what you see here on this picture is order flow. It doesn't show bid and ask. It only shows total volumes. And you see that in here, there was a strong uptrend. Within the uptrend, you want to see a dark area like this one, because dark area, at least with my software, signifies a place where heavy volumes were traded. And heavy volumes means big trading institutions. So you look for institutional activity within a trend. So in this case, buyers were pushing the price upwards, and in here, they were active and they were adding massive loads of volumes to the longs. Then they push the price upwards some more. So you want to see the price move away from that volume cluster, right? This is volume cluster right here. Price moves away from that volume cluster. You mark that level in your chart. What I prefer is mark the beginning of that volume cluster, and then you wait for a pullback. You wait for the moment where the price touches that support, that line again, and then, because this was an uptrend, you trade long from there, right? So you enter at a pullback. The reason why the price likes to react to this zone, to the heavy volume clusters, is that, as I was saying, the heavy volume clusters represent places where institutions were active, placing a lot of orders, and they are usually defending those zones. So when the price makes a pullback to this zone, which is clearly important for those institutions here, they become active and actively push the price upwards away from those positions which they entered here, right? That's why this setup works. That's the logic behind it. Now, here is another example of that setup. In this case, the price was dropping in a downtrend, and within the downtrend, there was a significant volume zone, volume cluster in here, also in here, which adds strength to it. So, significant volume zone within a trend. You wait for a pullback. When the price hits that zone, you go short in the direction of the trend. All right. In this case, sellers who were pushing the price downwards were active here, adding to their shorts. So this is an important zone for those sellers. So you wait for that pullback and trade from there, as those sellers are defending this heavy volume zone, defending their shorts, which they placed there. Right? So again, you look for significant volume cluster within a trend, and then you trade pullback to it. Here is another example, a long trade example. There was a strong uptrend, and within that uptrend, significant volume zone in here. So you wait for a pullback. When the price reaches the beginning of that heavy volume zone, you go long. Now, people often ask me how long they should wait. Like, if the pullback needs to occur the same day or the next day. Well, usually the pullback should happen within next couple of days. Let's say a week, 2 weeks max, all right? Then I usually don't trade it. But what is very important is that the price makes some price action above that volume cluster when it gets formed, all right? So it's not like instant test. Well, actually this also sometimes works, but what I prefer is if there is some price action above that volume cluster before that pullback occurs, all right? So if we are looking at a 30-minute time frame here, then I would say at least 2 footprints above that heavy volume zone. So 1, 2 complete footprints above that zone. Afterwards, if there was that pullback, it would be a valid trade for me, all right? A valid signal to go long from here. Now here is another example. There is an uptrend and significant volumes were traded here. This is the beginning of that heavy volume zone. This is a pullback to it, and boom, beautiful reaction. See, we don't even need bid and ask data to trade this, which is pretty cool, isn't it? Now, this is another scenario where I like to trade a significant volume cluster, and it is when it forms within a rejection. Rejection is when price goes one way aggressively, then turns and goes the other way, also aggressively. Somewhere within the rejection, somewhere close to the place where the price actually turned, there should be a volume cluster, like this one, right here. This volume cluster is the place where buyers started to buy everything sellers were selling, and they started their buying pressure and pushed the price upwards from there. So this is the most important zone within the rejection. This is the beginning of it. So you wait for pullback and go long from there. Now let me show you another example of this. There was a sharp rejection of lower prices with significant volume cluster formed within the rejection. So you wait for a pullback and go long from there. Now here is another example. Sharp rejection of lower prices with significant volume clustering here. And again, I want to emphasize that you don't actually look at those numbers. They're not really significant. You only look at the shades of gray. If the order flow gets dark, then it means that heavy volumes were traded there. So it takes just a bit of experience to start seeing those in the chart at first glance. So reading order flow can actually be pretty quick, right? So here is a significant rejection of lower prices with heavy volumes. You wait for a pullback and take it from there. Now, one last example of this. There was a significant rejection of higher prices. Within the rejection, you need to see heavy volumes. If there are no heavy volumes within the rejection, then you just don't trade it, all right? You need to see that institutional activity. You need to see the heavy volumes there. So this is the resistance. You wait for the pullback and you go short from there.